Hey guys, welcome to EIKV and this is Vishnu. So in this illustration, Auto Part Manufacturing Company Limited shows a profit for the year 2017-18 as 35,46,700. So in this company has a profit of 35,46,700 and the company is under the cost audit and the following details of the company has been given. So some of the details are an old machinery with the net value of 6,54,000 was sold for rupees 9,30,000. Number 2, dividend income was received amounting to rupees 84,500. A sum of rupees 58,000 was spent towards CSR commitment. The company was engaged in a trading activity where the purchase of goods was 13,50,000 and sales was 13,42,300 after incurring an expenditure of 14,800. Some renovation work was carried out at a cost of rupees 7,75,000 and the useful life was only for 5 years. The closing inventory of raw material was undertaken as undervalued rupees 29,600 and the finished goods was overvalued at rupees 65,400 in a financial records. Work out the profit as per cost account. So guys, in this illustration they have given a company named Autopart Private Limited and it is under the cost audit and some of the details has been driven. So what we need to do is we need to reconcile the financial profit with the costing profit. Therefore, I'm starting towards the solution. Heading Autopart Manufacturing Company reconciliation of financial profit with costing profit for the year ended 2018. So first of all, I have written profit as per financial statement. The amount is 35,46,700. After that, we need to less some of the incomes which has been received or which has been affected in financial statement, but that income will not be considered in cost statement. So such income we need to deduct such income. We need to less such incomes. So some of the incomes which is given in the question are profit on sale of fixed asset. The amount is 2,76,000. So how the 2,76,000 is arrived when we deduct 6,54,000 from 9,30,000. So over here the book value of the machine was 6,54,000, but we have sold for the price 9,30,000. So we will get a profit of 2,76,000. So such income is affected in the profit and loss account, but such income is not considered in cost statement. Therefore, we need to deduct such amount. So profit as well as next one, dividend income. Dividend income is received from another investment by the company. So such income is not considered in cost statement because which is an investment income or it is considered as other income. Okay, which will not form part of cost statement. Therefore, we need to deduct such dividend income. After that, we have an expense, CSR expenditure. So the CSR expenditure of rupees 58,000. So such amount of rupees 58,000 is affected in financial statement. Such amount is deducted in this profit, in financial statement profit. Okay, but this expense is not considered in cost statement. Therefore, we need to add this expense. Then renovation expenses. Renovation expenses is 7,75,000. So over here some renovation work has been carried out at a cost of 7,75,000 and the useful life is 5 years. Okay, so over here the renovation expense, the entire amount of 7,75,000 is debited in profit and loss account. So such amount of rupees 7,75,000 has been entered or has been affected in this profit, the profit of financial statement 35 lakh. So even if this expenses is not occurred, then the profit will be increased by 7,75,000. Okay, so over here when we go to cost statement, we will take one part of the 5 years, because one part of 1 year of 5 years, that means 1/5 of the total expense. That means the entire renovation expense is valid for 5 years. So we will split this 7,75,000 into 5 years, and one part of that out of 5, which is 7,75,000 into 1 divided by 5, which will give you 1,55,000. So such amount will be taken in cost statement at present or at current year. Other amount will be taken in the respective years. Therefore, we need over here we need to take 4 by 5th of 7,75,000, which is 6,25,000, 20,000. So this amount we need to add this back. Okay, after that we have a trading loss on trading, which we need to add back towards the profit, financial profit. That is trade purchases rupees 13,50,000, income of rupees 13,42,300, and then we have an expense of 40,800. So that we will get a negative balance or the loss of rupees 14,500. That is 13,42,300 minus 13,50,000 minus 14,80,000. Therefore, we will get a loss of rupees 48,500. So the loss of rupees 48,000 is already affected in financial statement, but the loss of trading activity will not form part in cost statement. Therefore, we need to add such amount. Then we have stock valuation. So over here I have made the stock valuation. So in this illustration it is mentioned that these stock valuation details has been given in only with financial information, or the stock valuation is only done in financial information. There is no details given in inventory adjustment in cost statement. Therefore over here it is written that semi-finished good is undervalued and finished good is overvalued. So we need to take the net amount. We need to deduct 29,600 from 65,400. Therefore we get a negative balance of 35,800. Such amount is affected in the profit of the financial statement, right? This amount will not form part in cost statement, shall be added, because the amount of rupees 35,800 should be added. The thing is that we have here a negative balance. So the negative balance which is affected in the profit and loss account of the financial statement. Therefore, the negative balance will reduce the profit of the financial statement. Over here, we are going to arrive the profit of cost statement. Therefore, we need to add such stock valuation because it is a negative figure. So the negative figure means the profit increases, right? Negative figure means like an income, right? Yes. So for arriving at the costing profit, we need to add such amount. Okay, so guys, so I will tell you, I will explain it once more. So going first, at first we need to take the profit of the financial statement, which is 35,46,700. Then we need to deduct all incomes which has been received in profit and loss account but not considered in cost statement, as well as we need to add expenses which not form part of cost statement and which form part of financial statement. Then the trading loss. So such trading loss is affected in financial statement, but such loss will not form part of cost statement. Therefore we need to add such trading losses. And then we have the stock valuation. Stock valuation is negative. That means the profit increases in financial statements, but to arrive at such profit we need to add such amount to get the costing profit. Guys, So thanks for watching this video. I hope you got clear clarification regarding this illustration. Thank you.